This would be the main. I mean, I remember Delta's like 16-day win streak earlier in the spring going into the summer. These stocks turn around on a dime. Now it's the other way. It's coming down. What makes you think this is not necessarily a buying opportunity?
Yeah, absolutely. So I think within the space, I would say we're seeing some bifurcation where U.S. domestic does look a little choppier. We do have question marks about what should happen to the economy and whether or not the group can sustain demand. You know, on the opposite end of the spectrum, international long haul is doing very well right now. Mm-hmm. Transatlantic and Trans-Pacific, the numbers look great. So I think when we think about this interplay between revenue and expense, you do have some push to cut expense. It's fine to have a lighter cart, but a lighter cart's useless if you don't have a horse to pull it.
Sure.
So, you know, we are seeing the best horsepower right now is on the long haul side.
And that benefits, remind me again, I mean, this is where I would think Delta, United, those kinds of more internationally geared carriers versus some of the domestics. And is that kind of the strategy you'd recommend that people kind of have with the airlines for what, the next 3 months, 6 months or so?
Absolutely. So international long haul is doing great. If you're a network carrier today and you have very good transatlantic and trans-Pacific metal, that's going to give you some nice tailwind. At the same time that's happening, I think the network carriers are also benefiting from this spooling up of their co-branded card revenue. While all of that has happened, we have seen a shift since the pandemic started. Most people are only in the office 3 days a week. That's changed the way people travel and people purchase tickets, and it's supported Economy Plus. So if you're a low-cost or ultra-low-cost carrier and you don't have Economy Plus, that puts you in a tougher spot. So we do like those network carriers with the notion that American Airlines is heavily levered.
So there's two kind of things to ask about right now, and maybe the most important one is leverage, balance sheet, you know, what's going on there. The other piece of this has been the credit card business has been a huge driver of revenues, if not earnings, for some of these carriers. And is that necessarily sustainable?
Yeah, so I think on the co-branded card spend, that is, it does look like it has legs. So it would be disingenuous to me to say there is no risk from everything going on. But when we think about what's happening today, what's probably going to occur next year relative to what this all looked like pre-pandemic, and those network carriers have really gone a long way, we would argue, in de-risking their earnings stream. So if, for example, if one looks at pre-tax margins for the network carriers today versus 2019 and compares that to how the discount carriers performed then versus now, they've essentially flipped. Partially on the co-branded card side. Wow. Partially because the network carriers definitely have momentum now. And those network airlines that have managed to not get too deep into leverage, we think are very well positioned. You know, United Airlines would be a good example. So
that's fun. Some of the network carriers sound like credit card businesses with an airline attached, but be that what it may. Last quickly on the leverage issue or on the balance sheet issue, a company like United, which you otherwise like, what are the potential earnings squeeze it could face from higher rates?
Yeah, certainly. So there is some differentiation in the group with respect to the extent to which they have fixed rate debt versus floating rate debt. You can have some nuances there. And then from an economic perspective, of course, certainly there's the chance we're wrong on Trans-Pacific and Transatlantic giving them a boost. So if that revenue slows down, you know, then we'd need to start thinking about how well seat mile costs are managed. And I think across the group, that's been an interesting challenge between supply chain challenges you've had with the OEMs, higher labor cost.
Yeah.
So those are factors absolutely that can affect the ability to deal with financial leverage beyond what's happening with interest rates.
Yeah.
But
well, listen, they're all going to be bailed out because passengers are going to be 5% lighter thanks to Ozempic, and that's what I don't know if you saw the report the other day suggesting such by a colleague of yours.
I did not see that, but I will let them defend that thesis.
Yes, they did. Steve, thanks so much for your time today and the warning on some of the factors to most watch out for. We appreciate you coming in.